Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. And here we're getting ready for a new week of trading coming into options expiration. I would expect volatility for sure sometime this week. We've been very extended up here, but as long as the bulls hold it up here, no reason to think they can't try to push this a little bit higher, right? So we can look at this formation as maybe an ascending triangle, which is bullish, but I think the move will be relatively short-lived. I just don't know if the bulls are going to have the strength to carry this continuously upward day after day after day without some sort of a more major pullback very soon in the markets themselves. But what we're looking at here is once again this 10,480 mark that I've been talking about for a very long time now was not broken this last week. So we will be watching to see if it gets broken here early on in the week. As I said, we're already up in the after hours. I don't know if that will hold into the morning hours. But we're looking for and still waiting on breaks over 10,500. If you want to go long, great. I have no problem with that. But you are going to want to be careful with those trades. Be careful with your position size and be careful with these overhead levels of maybe 10,600 to 10,700 if in fact it's going to even run that high. This thing can turn. Once it gets above 10,500, it can really turn at any moment. So you'll want to be very careful if you decide to take any kind of a long position here on the indices. Now we did and are pushing above the 200-day moving average. Looks very still pretty strong in through here. So no reason to think that we can't push a little higher. Once again, watching that 10,500 level, that's really where you want to be paying attention to the to where the market goes and where it opens tomorrow. If we open at just above 10,500, maybe it hits some stops and maybe we see some upward pressure. So we'll be watching that very closely. But that's my trade, still above 10,500, and then really not until we get back below these moving averages am I really keen on a short position. So you want to watch that very carefully too. There's really kind of a cautious zone in through here. If it holds and you take a short, it's a speculative play. It really is at this point. There's still nothing broken from the bulls side. NASDAQ on a 60-minute, you can see us moving up into this overhead resistance, pulling back. Now we're sitting in between the 80 and 1900 levels. We're up above this to start the day tomorrow if it stays up that high. But as of right now, no reason to think that the markets can't open up 8 to 10 points in the morning if things can stay strong into those morning hours. Now, what they'll do after the market opens is anyone's guess, but Lenger, you got to kind of tip your hat to the bulls at this point. They've been able to hold this up here and push it up a little bit higher. If we take a look at it on a daily, you can see what we've been doing. It's been a big push up, but boy, it looks like it might want to be pulled right into this 1920-ish area, 1910 to 1920. Anything over 1900 is probably your entry on a NASDAQ long position. But once again, I just wouldn't. I'd be very cautious about holding too long. I mean, it could run straight up, and if it does, stay with it. But you got to be very careful on any kind of long trade up here. It's just getting very extended at this point. From a weekly, you can see where we did not make it to this overhead level, which is the 1920-ish level. So there's a couple different strong levels of overhead resistance sitting up at the 1920-ish level. So above 1900, maybe we do make that 1920. Watch that coming into tomorrow's trading. The SPY on a 60, watch this blue line. This is the new line to watch for the week. So back into the 1105 area, should give us a little bit of support here. Then it's 1100, and then it's on down from there. Any kind of break of this 1090-ish area, though, below this 1088, I think that starts to make for a pretty decent short position. I do realize that is 20 points away. It's a long ways in the S&P. So you can still take shorts on the way down, but you're going to want to, just be very cautious in here. The markets are extended, but they don't have to move down here. They don't have to do anything. Just watch and wait for the breaks of these overhead resistance levels. Up here around the 1115 should be a good overhead level of resistance. But if we open as we are right now, we're already above it. Then we could see some stops being hit, some bears covering, and that'll drive this thing right up into that 1130 mark. So we're watching 1115, 1120, 1125, 1130. All those levels are giving us some areas of overhead resistance. See, look at what a gap tomorrow would do. Put us right above that 200. Then no reason to think that we couldn't maybe reach some of these upper levels up here on the S&P. From a weekly perspective too, same thing, 1130-ish. Looking at that for the overhead. These markets, we've been moving down, but it hasn't been anything. It just has not been in any kind of a scare tactic type of a move by the bears. We've moved down, but the bears haven't really taken this thing off to any new lows. So no reason to be all that necessarily concerned if you're bullish on the markets right here. There are a couple of different things playing out, and you can build a pretty good bear and a pretty good bull case in either direction, even though we are as extended as we are. Yes, we're going to be careful to the bull side, but don't let that stop you from missing out on some potential profits to the long side if you've got good trade setups. VIX on a daily still stuck in kind of this falling wedge here. On a weekly, same thing, just a bunch of chop. 1, 2, 3, 4, 5, 6 weeks, and we've gone nowhere. So not a lot of, there is indecision here, but the fear factor really in the markets hasn't hit yet. Whatever, if anything's going to happen that's going to drive these things down, it obviously isn't around yet. This thing has been very flat for the past few weeks, showing that there's really no, the sentiment within the market really isn't all that of based on fear quite yet. Apple on a 60-minute drew in some more lines. Looking at this as the ultimate line to break for the bears. Otherwise, the bulls are firmly in control up here, doing a very good job of getting it up and over a lot of these higher levels on these huge moves from 235 all the way up to about 265. $30 move in about a week and a half. Impressive. Even by Apple standards, that's pretty impressive with the market we've been kind of dealing with right here. Overall, very, very choppy the last few weeks, and you can see here on a weekly how we now are up and above the 20-week moving average, looking for pushes above this 270, 280 ultimately. If it gets up and over 280, I think Apple's got some room to run here. We'll see if the markets decide to pull back first, drop first. It's anybody's guess. But Apple is making for really just some sideways choppy action right now. This is the best way to trade Apple, in my opinion, is to day trade it at this point. It's no different than FAS and FAZ, which I've been covering in these videos as well. Apple has been a good stock to day trade. Not so good if you're a longer-term investor. There really hasn't been much going on since about April in Apple. Just nothing right now. Waiting for more major moves either above the 280 or below the 240 as it stumbles sideways, trying to figure out which way the market's going to take it next. FAS on a 60-minute consolidating up here. You saw the gap up, the move down on Friday. Now we're seeing consolidation. This all happened, Thursday into Friday. So breaks above, 22 for a long and breaks below 21 probably for a short. Making sure you watch these moving averages here for your lines of support on the way down. Otherwise, if we look ahead and above us, above 22, I think 2270, 2260 is a good line to be watching. And then above that, it could be upwards of $23.50 to $24 before this thing sees any kind of a pullback. That makes for some really, really nice trading within FAS. Below this area here is what I'd be looking for a short, and that's around the $20.50 mark, I believe. FAZ on a 60-minute working its way down. This blue line is one to be watching. Have that drawn in here. So more aggressive traders want to look for maybe something up over 1485-ish or so, keeping in mind that there's some pretty good resistance up here at the 1420 to 1425 area. Then above that, 1450, and then above that, let's go 1480-ish. So decent long plays there. Anything below about 1330, I think, makes a decent short opportunity. We can play that back into 13, maybe into 1250. Those are your levels to be watching coming into tomorrow's trading. Now, because I'm doing this video a little later in the day than I normally do, the market is open, or futures are open. And I can already tell you that, being up 6.5 points, if it'll hold, I don't know. I mean, it will create another gap within the charts themselves, but it is what it is. Period. The charts they just are what they are. And right now, they're remaining bullish. We get back below about the 10, 90-ish area. Okay, then I'm going to start looking at maybe some more bearish plays there. But for the time being, just play what's in front of you. And right now, I mean, I got to look at this as bullish until we get back below these areas in here. Then we'll start looking at where we might be going. At least on a pullback, if nothing else. But maybe down. Maybe we'll make it all the way back down to here. But we have to only look at any kind of move down at this point as a pullback and nothing more. Don't get psyched into anything more than just that. And I'll be back with you again tomorrow night with the new take on the markets. Bye.